Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. You know, one of the big questions I routinely get when I'm out seeing people or talking to people about my profession is, how come I can't just do my own tax return? And, a lot of times, maybe you could. It just depends on your level of sophistication. But I thought I'd spend a few minutes today talking about the 10 most common filing mistakes and how to avoid them. There's an excellent article that was on January 11th of 2017 written by Kay Bell. Now, I wanted to go through what I see as the main issues or the main areas where I see errors. And, this is definitely the case with people who are self-preparers. And what I mean by that is you're not going to an accountant or a tax preparation company to do your tax return. So what's the biggest one? Well, the biggest one by far is mathematical miscalculations. And that's simply, adding up numbers wrong or making some sort of mistake with the numbers on the tax return. The problem with that is you may overstate your refund and, end up expecting a bigger refund than what you actually get. Now, one of the ways you can reduce that risk, obviously, is to use tax software. Now, there's the big names, the TurboTaxes and the, all the different ones that are available online. The only problem with that is, you have to make sure you put the information in correctly. For example, if you entered $3,500 in instead of the real figure, which was $5,300, if you transpose numbers, what happens is when your return is filed, the IRS will take a look at it. And if they find a discrepancy, they're going to send you one of their little friendly notices that say, hey, we found an issue. You need to correct it. So what's the second big issue? And that's computation errors. Now, how is this different than a math? Computation errors are not necessarily an error with doing the arithmetic or the multiplication on a return, but potentially, making mistakes in figuring, an amount for a credit or an amount for a taxable income amount or a withholding amount. So it's just a computation error. For example, you might find that your taxable income is, $52,000. And if you go look at the tax tables, you might look at the wrong column and maybe you've picked the single column instead of the married filing joint column. Another big one, and I see this a lot, is misspelled or different names. Now, why is that important? What the IRS does now to protect identity theft is they do what's called a match with the Social Security Administration, and they make sure that the numbers and the names on the tax return match. Now, where I see this happen a lot is with new wives. And that's because they may have gotten married but they've never gone to the Social Security Administration and changed their name. So what happens is when we file the tax return, they're excited to be married and they use, their new married name with their Social Security number, and we e-file the return, or if you're doing it yourself, you send it in yourself, and it gets rejected because the name doesn't match. So one of the things you want to make sure of is when you change, you get married, you want to make sure you change that information with the Social Security Administration, and especially with children too. I see that sometimes with children, especially from mixed marriages or something like that, where there's children with different last names. It's very important that those things are consistent. And we actually ask clients in our practice to actually bring a copy of their Social Security card in so that we can take a look at that and see exactly how it's spelled. The next thing is direct deposit dangers. Now, one of the new things here in the last few years is you can actually split your refund into 3 separate accounts. Well, that sounds great. There's a particular form that you file. It's called a Form 8888. The problem is now you're going to have to make sure that you get all those numbers right. And why that's a problem is the IRS doesn't have a procedure per se for replacing lost electronic transferred funds. So if you by chance put the wrong information on there and those funds don't get returned to the IRS, there is a distinct possibility that you might not get your money. So you want to really pay attention to making sure you've got the right routing and transit number and the account number and the type of accounts on there. Now, another thing that a lot of people overlook, and that's additional income, from maybe additional, like a side job or something like that. This is the notorious 1099 miscellaneous. And, that's an easy one. Or maybe you have some savings and investment accounts. A lot of times when clients come in to get their taxes done, I always look at the previous year tax return, and, we may be at the point of saying, okay, well, what bank interest did you have? Well, they didn't send me anything this year. You have to really take a look at that, because in some cases you may have to go up online and download those things. what happens is, the IRS gets a copy of those things as well. And so generally about the summer after tax filing season, they start to do this matchup. And, they go through and they say, okay, Mr. Jones reported, $400 in interest income on his tax return. But when we look at the actual tax return, we see, or the actual documents that were submitted, we see that Mr. Jones actually had an additional $75 in interest income from a credit union account that they didn't put on the tax return. So just make sure you compare your documents, look at all your bank accounts and any investment accounts you have, and make sure you're putting that information on the tax return. Because again, this could result in penalties or interest if you didn't put that information in and file it, on time. The next thing is filing status errors. You need to really make sure you understand the different filing status, whether it be, a single, or if you have, married filing separate or head of household. I see this a lot with divorced couples. They don't realize that, if you're divorced on the last day of the year, you're considered divorced for the whole year. Same way if you're married, you're considered married for the whole year. Another area, Social Security numbers. And this may seem kind of funny, but what they say here in this article, and I've not personally seen this because our software won't let us do a return without these, but what they're saying now is because the IRS used to send out name labels with Social Security numbers on them, some taxpayers are actually forgetting to write their Social Security number on the tax return. And that just, what all this is going to do is just going to delay your return from getting processed. Another one is complete charitable contributions. Now, this is a little bit getting into weeds, but what we're talking about here is make sure you count all the ones that you did, but be sure to follow the donation rules. The most important being that you have to give it to a qualified organization. That's one that's tax exempt from the IRS. I don't know how many times people have said to me, hey, you know what? I have a charity case, my aunt or my son or my uncle or somebody. If they're not a 503c charity, then it's not a deductible expense. And if you're going to donate goods, you need to make sure, as the IRS says, they have to be in good or better condition or the deduction is disallowed. One of the things that I tell clients to do is to make an itemized list, because if you go to like the Goodwill or Salvation Army, they're not going to take the time to write up each item that's on your donation. So you're going to take some time, and I recommend, put down what the item is, the condition it was in. Some people actually take digital pictures of that and put an amount. Another area, and this one's kind of funny too, is forgetting to sign the return. This kind of goes away in the age of electronic filing. But if you're one of the old paper filers, you make sure you sign your tax return, because and both spouses have to sign that as well if you're filing a joint tax return. And I guess the final mistake, and this one can be costly, and that is missing the filing deadlines. So it's really important you pay attention to what the filing deadlines are. And if you need to, file an extension. Now, a lot of times clients will get upset because they'll say, well, how come I'm being charged a penalty, Ralph, even though we filed an extension? Well, here's the kick to that. Even if you file an extension, the tax is still due when the tax was supposed to be due. So don't be misled in thinking that, well, I owe a lot of money. I have some clients that'll say, I figured out my tax return and I'm going to owe, so I'm just going to wait and file it once the extension comes to an end. Unfortunately, the way the law is written is that tax was due on the filing date. So if you don't pay the tax on the filing date, you're still going to pay a penalty or interest later on. So I hope this was helpful to help you avoid some of those tax filing mistakes.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.